Yeah. So for my next question, boss, this came up from someone using TurboTax. So what's one audit red flag people don't realize they are triggering just by using it wrong?
Well, yeah. So TurboTax itself is not the problem because if I use TurboTax, it would come out the same as how I use any other piece of software, right? It's operator error, and it comes down to the fact that people who use TurboTax don't know what they're doing, but which is why they're not professional tax people. Anyway, so the biggest red flag that that you can do is, well, I mean, there's a bunch that might tie for first, but the biggest biggest number one is having large losses on a Schedule C, especially with no revenue. So that's audit flag numero uno. Schedule C is the, well, so the number one biggest audit flag is to use the federal fuel tax credit, which is an illegitimate thing for the vast majority of people who claim it, and the IRS essentially cottoned on to this fairly well over the last couple of years. Finally, and but that's something that shady taxpayers do. That's not something that your average TurboTax user will do. What people at TurboTax might do is they will file a Schedule C, which is either a disregarded entity or an unincorporated business. That's just under their personal name, and they'll have all these expenses, and they'll have no income. So part of having expenses that are deductible is you have to be in service. You have to be actively having a trader business, and it's not guaranteed that you're going to have some sales, but you probably will. So if you spend $20,000, $50,000 on some business activity and you have zero revenue to show for it, are you in business? That's a very valid question. And in some cases, it could be, right? So the example I always give is this place that opened up near me. Um, so I go to the shopping center where the grocery store is around the corner from my house. And in the corner of the shopping center is, a bay that had been turned over several times actually. But one time, uh, I went there and there was this serve your own popcorn place. So they had all these different flavors of popcorn. You pour your own, and then they weigh it, and then you pay by weight. At least I think that's how it worked. It was like those frozen yogurt places, but for popcorn. And I have never seen this store concept before for popcorn. I've not seen one since. So I go there. They have their sign, saying grand opening. They got the big machines. They were like big gumball style machines filled with popcorn. They were shiny. They looked good through the window. But I don't really eat popcorn. I didn't go in. I never saw anybody else go in. The times that I was going to the grocery store. And so 3 months later, they were gone. Now, it is theoretically possible that they had zero sales and they were in business. They were trying to make sales. They had all the operations, they were open to the public and all this kind of stuff. But realistically, they probably had some sales, just not enough to keep going. Right. So, while it is technically possible to have no revenue, and be open for business and trying to make profit, it's unlikely that you have literally zero. Usually, at least somebody trips and falls and comes into your place and gives you sales. So that's the biggest red flag when it comes to audit for people who are preparing their own uh, stuff on TurboTax or whatever other software we're using.